Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back again. Guys, let's take a look again on the gold market. So recently it was a bit choppy price action, especially around the support area that we have discussed. And mostly market was able to fulfill the trading plan that we have suggested. Indeed, some spike down has happened, completed the targets that we have specified, and immediately some bounce has followed. So as a result, we have a few important to us patterns that, let us feel a bit more confident with the current setup that we're talking about. So first of all, the grabber that we have discussed on a daily chart has been formed with recent spike, and that led us to consider its lows some kind of the background, maybe some invalidation point for a bullish setup, hoping that market will be able to proceed higher right from there. So at least this pattern is an important part of the bullish context on the daily chart. This is important. On the 4-hour time frame chart, we have nicely looking bullish reaction on the support. So if you take a look, this was spiked down, creating the new lows, and market has closed above the top of the previous candle. So this is not just a bullish engulfing pattern. This is bullish reversal bar that agrees is actually the same bar as on the daily grabber. And based on the performance of the market in general, what we could say that what actually we could like here in this downward direction. First of all, it's rather choppy. We do not see something of that kind, which looks bullish. Second, appearing of the bullish reversal pattern, of course. And from that standpoint, this type of action, this downward action, if everything goes well and indeed market is bullish and its reaction already is done, this theoretically should be just a retracement back in the body of this pattern. So from that standpoint, market should not take it out of these lows and just keep going higher. That's optimal to us scenario that we would like to get. At the same time, for some case, if you would like to take position based on this pattern, I would consider the stop placing somewhere below the 18 even. By a few reasons. First of all, because it actually has the harmony with this level if you consider the shoulders, right? So this seems, just safer to place initially stop right here. Although, to be honest, I hope that this will be enough and this low should hold. But anyway, initially it would be better to place it right here. If you have taken position based on our yesterday trading plan, you could keep it at break even. So we have taken position on the spike down to 11 or 7 with the butterfly that we discussed. Just you could keep it. If market still will drop below it and keep going lower, you could consider another taking new position here. But this is for those who haven't taken any position yet. Initially, probably we have to place stop somewhere. It just will be more safer. Right here. Besides, if you take a look at the cross-market analysis that we usually follow to currently, so on the dollar index, you could see that market hasn't quite reached the 618 level yet, and as today said in our Forex report, euro currency analysis, it's really chance exists that market could try to reach it, which also will become some, more or less headwind for the gold market. At the same time, that 10-year interest rates, you consider this rally, which actually has become the problem for the gold to follow up immediately. This is the rally on the interest rates and some upper direction together with the upper direction on the dollar index. And in general, if you take a look at the gold market, it shows really great resistance to these two factors, is because if you take a look at the euro currency, it just has collapsed. While the gold market was able to stay above major support and even could go higher. I suppose that this is because of some geopolitical tensions, problems that exist around these negotiations between Russia and the West. As you know, So that's, well, provides some supportive background for the gold market as well. And since there is some, well, room exists till the final target as here as on the dollar index, it means that gold market theoretically could stay at some pressure for some time. And from that standpoint, maybe it makes sense to hide the initial stop not here, but below this level. Finally, if we'll take a look at the hourly chart, that was our entry process. As you can see, market indeed has shown the spike down to complete the OP 1807. It's also 1618 extension of the hour butterfly, although it has been completed after the initial pullback has happened. Now market is returning back down. From the technical, the divergence here at this target has been completed because it is lows between the tops. It has been taken out, so this divergence we do not need anymore. But another reason why I'm talking about the 18 even stop placement, or below 18 even, is actually, do not forget about the double top target. So recall what we said. Here's 1618 stands. It's not really proper way to calculate the targets, but I just show you, make the easy explanation. It's 1803 if you measure the double top itself. So with these targets and down, so it will be somewhere around 1795, 18 even. So it's just avoid to occasional washing out if market will tend to complete and touch the 18 even target. So that's why currently I think that too better to consider. Although I really hope that these lows has the significant meaning for overall setup and market will be able to keep valid this action and actually to grab on the daily chart. So, but we will see what will happen. It's currently gold market is resisting to the bearish pressure, and it just needs to be patient until dollar index and 10-year yield hits the major targets. Once it will happen, it will be some relief for the gold, as it will be able to use retracement on these markets to show the upward action, upward continuation. So that's what we have currently on the gold.